Okay, guys, so welcome back to It's Been a While and welcome to our mentorship section. So, some of the things we didn't have to do, I think we've had the Saturday class today with ourselves. I wanted to spend a little time teach you guys about indicators, one or two indicators you can always play around with, or you can by your own self read up that one. But that's not what I want to teach you now. So there's what I want to show you now. The other phase of our mentorship is market structure. Now, the market structure is that for every market, there is, for you to know the direction of the market, there's a market structure that when you learn what we call higher low and higher high, it helps you. Now, for any market, downtrend and uptrend, you have to know that the market does not just move. If the market is uh, outside when the market is sideways. Sideways means how do I put it? Like if you see the market that this market from this point here, the market had was trending. So with this kind of market, it's easier for you to follow it. But when the market is moving sideways, it's always difficult for you to analyze it, especially what's it called? They call it ranging market, especially newbies. So like if you watch gold, it was only last week gold tried to give a clear direction, but still gold is still trying to consolidate instead of it breaking the support for the first time. Price would have stayed out, but between Friday, Thursday, gold has entered back. So those kind of markets can be difficult, to know the prediction. All right, so now what I want to teach you guys is that let me use the board. Let me use the board so that we. Now, what I want to show you is that on the daily time frame or weekly, we simply start our analysis by marking our highs and our what lows. When we do that, we make sure we've marked all these levels. We now know if the market has trend line or is moving sideways. We now draw it, and then we now know where to wait and take our entries. Remember, depending on the time frame you're using, the more the accuracy of whatever you are going to trade, you are going to take. If you use weekly, it's always difficult. 1 out of 10, a weekly setup of zone should be violated. But when you use 4 hour, 1 hour, sometimes all these high impact things can always, mess up your count. But when you use weekly, monthly, because those key time frames will only show you one structure. It's not going to show you two things. Even when they are conflicting, sometimes it's rare. But all those 4 hours, sometimes it's 4 hours is showing you buy, daily is showing you sell, weekly is showing you sell, 4 hours is telling you buy. Then, you know. But today let's see what I want to show you guys. So I will show you how you can start your analysis for the day. You want to start trading, especially these days, so you need a lot of things to take in place. So if you're using weekly or you're using daily, whichever one, but I don't recommend 4 hours. So this is Euro USD for the week. So I guess for now I'm going to plot my low. So this is a low here for Euro USD. This is a weekly time frame. So and then this thing looking here, looking like a pin bar. If this third one completes, this is going to make it like what 3 hammer piece. This is for a buy structure. At most, everybody is seeing a sell on Euro USD. But what me I'm seeing on Euro USD, I'm seeing as long as these candles are forming here, unless they are now becoming fake or manipulation. But as long as the candle that has closed here has refused to close like all these candles, they are closing and leaving gap under the tip of the edge of the candle and then coming up. Then even though this market is bearish, but when you start seeing this, know that the market can one time, give you an impulsive move before it could correct and then maybe come to this side. But that's not what I want to show you today. I want to show you either you're using the daily or the weekly. The first thing you do is to always check out your highs and your lows. So this is our highs for now. Euro USD has this resistance to pass, and also these are low. Between today and this week, if Euro USD ever hits from this place, I will be buying it, even though it looks like a sell. But for now, it will not break here without it giving a strong move. Now, this weekly, so we take note of our highs and lows, and what we're going to do, we'll always look for those points. So now, what is this thing saying? Based on the market structure of this market is on a downtrend. So now I have taken my highs because uh, on a downtrend, the formula is the market creates what we call lower high. Now, lower highs is where you take a sell. Like when a market breaks its support, it comes back to retest it. So you are not supposed to enter at the lower low of the sell market because the market can be creating a pullback. So you look for Euro USD where this market can give you a sell opportunity. Since it's on a downtrend, it's on a bearish market, it's on a downtrend, we're going to look out for a lower high where we can take our sell. Like for example, if the market was here, the only time we can try to sell it is a lower high. This is a lower high, this is a lower low. So a lower low will always be a pullback. Then at a lower high, the market is going to, respect the pattern of the market structure. Let's say lower high, the market will test and then sell back. The lower high, the market is going to use the lower low to retest the lower high and then sell back. It's going to sell back like what it was doing, it pulls back to a lower high and then sell. So, but how you do when you come on the chart, you try to get the market structure. You look at the market. Is the market uptrend or is the market downtrend? If the market is downtrend, now we have to take note of all the highs, lower highs the market is creating. Now, why is this? This is a lower high because this um, high here or this low, the lower high of this is higher than this low. So once it retests it, it has always broken support. Once it pulls back to retest the lower high, it has always taken off the support. So now if it tries to come here now, the next time it might try to clear off this support to this level. So, but this is a market structure for this. So now that we have done this on the weekly, we can scale down to the daily so we can see it properly and do our alignment. So this is Euro USD. So when I plot a line straight here, so I'll be observing that what now all these lines will take time to draw them to the end because what is happening here is not important. Sometimes their price has already played out and passed, but this is the current, you know, structure of the market from here. So we're paying attention here. So we plot our line, and then sometimes when the market has violated this support, this support here, we had gone outside the support. So the right question is when the market corrects back to the support, sometimes you will buy it. But now that we're on a downtrend, this support can sometimes become a resistance if the price has broken it. So this is the market structure for Euro USD here. The plotted Euro USD. So this is a lower high. The lower now, how did we know that Euro USD has started a bearish trend? When the higher low of the uptrend ended here, when we took out this higher, now let me write something so you get it. This is the structure for the market. Okay, uptrend, uptrend market. Don't forget, I told you, unless the market is sideways, then the strategy still works. Take your high, take your lows, take your high, take your lows. But what I'm saying is, basically, in market structure, you will always know that for an uptrend, we have higher high and what? Higher low. Now, if those days gold used to be on buy last year, December, you will not buy at the high of the candle. You are going to wait for a retracement. We call it 50% retracement. If I use, okay, the market is moving like it's moving in an uptrend like this. So the market will buy. Because you know it's a buy, you are not going to enter at the higher high. What do? You allow it come to the low, to the higher low. That is, the higher low will always be at the trend line. Meanwhile, you have used the first, you've taken note of the first low. So you mark all these lows. So when it comes back into the higher low of the trend where it's moving, you now always take your buy here and avoid taking it at the higher high. So the market is going to spike, then it's going to come back to the higher low. You take your entries from there, your higher low. That is how it is. The same thing, if it's a bearish market, the market is going to sell. When it sells, if it takes off a support, or before it takes off a support, it's going to come to test that trend line. All these places are your what? Lower high. For a downtrend, it is lower high instead. Then where the market will always will pull back from a lower low. Now, when it takes off a support, the lower low is always a support. If it takes it off and break it, the next time it's going to, when it retests this trend line, it's coming with much impulse, much momentum. It's going to break that support. Now, when it breaks it, don't chase the market when the market has, allow it to come back to find a lower high. Because when it breaks it, eventually it will always come back to retest it. Now you enter at the lower high and avoid the lower low. So if I enter at the lower high, wherever I see price is creating a lower low, I will always put my TP there. And that is just the structure of the market. It's very easy. Once you know market structure, anytime you get to the chart, you always want to get the structure of the market. This is the structure of Euro USD. Now, if Euro USD comes to this, if it comes to this zone now, lower high, lower low, we test the trend line, we sell. Now we are either retesting the trend line to go back to this last support, or we are retesting the trend line because Euro USD is on a key level. This is a key level. Now, you don't expect this zone that gave us up to, this zone gave us up to how many pips up. You don't expect that price will just come and hit here and break it. So it's supposed to give a very strong candle that is going to the upside before eventually we knock off this. Because if Euro USD breaks this place, this side is certainly that the market might. But for now, I think fundamentals is playing a lot. It's like has a lot to play here. All right. So now I hope you're understanding. So now I am on the daily time frame. Now that I'm on the daily time frame, I have been able to mark my zones. Let's start again, whether I use daily or weekly. Sometimes you can always use here, there's what is called the line chart. You can put it, sometimes it's always easier for you to, you know, see the chart from this way. Now, I told you the first thing you get to the chart, try to take your low. So that is a low there. That's a low there. That's a high there. Now, the problem with the line chart is sometimes it does not capture the wicks. You see when I'll be, I have to go and correct it, but it's very easy. It will always show you where there are levels and you are going to note them. Like this, all these curves are levels. So if I put it on the line chart, I can see that there's a level here and there was a level at this place. So at this place, the market had broken the support. So we are now seeing this place as a resistance because the support at this point had been violated a little bit. So for now, we're not uh, trusting this guy that it's support, though we have created a new support that has pushed us. But for now, price is still reacting to that place like a resistance. So we have our low here again. So I've taken the low. So we draw the line all the way to the right hand side. So all the lines go to the right hand side. So you know when you do it like this, you know when the price has closed above or below that place. So now, if you watch here, we always note if the market had violated structure. So this was that's what we call a breakout or a break of structure. So you always use a thin line where there is a breakout or break of structure. Just shift this rectangle a little bit to a point where you know that this is a break of structure. So where there's a break of structure, you know that the market has changed direction. So what am I saying? When Euro USD violated the low at this point, we already knew that the market has changed from the uptrend to the downtrend. So that is it. So now we are going to mark our key resistance as our key resistance here. So we mark it from that side. Then we also mark from the left hand side. When the market was moving here, we had a break of structure. So when there's a break of structure, we need to put it so that because when the market takes off this resistance, we have one touch, two touch, three, the next time we put it off. Sometimes if the market was to continue buying around this level in between, it will be waiting on this place to form a support to go up. But since it was the trend was over, that was it. So this is our trend now. So for now, uh, we are going to use the trend line to place it at the edge. So when I change this thing to candle pattern, you're going to notice there's going to be some mistakes. So, but the line chart easily gives you idea of where there are pops. So you know that this place is either a resistance or support. That's the easiest thing. It's easier than candlestick. But the problem is when you change it, you are going to notice that the line chart will not include the width of the candle. Let's go back to that. You see, I have to arrange it. Use it. But now the candlestick is giving you ideas to cover the width. So this is the width. So that's the problem with the disadvantage of you see where my missing is falling, whereas it's supposed to be exactly at this the body in between that width and the body. So that's where it's supposed to be our zone. So that is it. So you can see how I place this now. So meanwhile we're talking of the market is on a downtrend. We now scale it to the 4 hour so we can see what is there. Now on the 4 hour, we still come in with a bullish candle, but we need to know what is happening at this in between this trend line and this. There's this big candle that sometimes I used to put a structure like this to show that there was a very high impact that caused the candle move to place. That was an institutional move. And if you watch this kind of candles that have moved at either at a higher low of the market, sorry, at the lower high of the market, or where the market hits, you see the market is on a downtrend. When it hits the lower high, there have always been a very aggressive move from that place. So that is that. Sometimes I just want to differentiate my colors so that this one is so you can see that. So I hope this helps in a way. So this Euro USD, as it looks, uh, okay, somewhere around the 4 hour, if you watch again, if you watch Euro USD on the 4 hour, there's a market structure on the 4 hour here. So I will also draw a line from this side. I mean, it's trying to form a buy. So I want to know when the structures, when there's a violation from either the sell trend, or we know that now we are set to buy. So all these lows, I'm taking it to the end, and you see what I want to do. The work of that low is helping me know when the market is reacting at the pullback. So now this is it. So this Euro USD on the 4 hour, if we violate this low of this buy, that means the market is going all the way down. Any violation from that line from tomorrow, we are heading downward. I would rather enter a sell. But for now, this is the market structure I'm seeing on H4. So we either respect this lower, this higher low is forming here. If there is, it's on a little bullish trend on the 4 hour here. So, but don't forget, if we check on the weekly, this is a weekly zone. So now the market is buying. I've plotted to know where the market, is creating a trend. There's a trend the market is building up here. So these lows I used to connect. It's helping me follow the trend and know what the market is doing. So I know where to trade. So that the market is trending does not mean that it does not have the right hand side to look at. So if I put the right hand side of this power to this side, then you also know that it's either if this market continues this way, if it comes to somewhere around this place, the market can follow this trend like this and then come and reverse at that place. If the market has not changed direction, it will reverse in between these levels. Because at those places too, there are resistance there, and it's sitting on there's a resistance to the left hand side. See those candle wicks? Let me zoom out a little bit. There's a resistance at that place. Let's check it out on the daily so you know where I will place it. Now, on the daily, sorry, yeah, this is what I'm talking about. On this daily here to the left, see this place here, it can affect the market to change direction. So on the daily, I have plotted that place. Also, it's touching the other trend line I drew on the 4 hour. So now I know what to note if the market gets to that place. So you can see there's 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 a resistance there, and it's also matching with this top resistance at this place. So I'll shift it a little bit so I know that resistance to the left plus this channel resistance, either the market is going to break it and go up, or it can reverse sometimes. So this is a market structure for euro. I was buying when the market came back to the lower, the lower channel of this. So this was supposed to be a buy until that, you know, that low is violated. So this is a very simple strategy that once you build your trend like this, you can easily follow it up and make money. Because once I know the direction of what the market is, where the market or what the market is doing, by me connecting my highs, those highs could be daily high and daily low. So like Euro USD, what what we needed to do here in this case where Euro USD has been selling, a lot of people have been selling Euro USD. You just need it to come and test the lower high, which is the trend line, and then that's why we are taking all the highs. We are marking them to the right hand side. So, but you have to do your own as it's gonna be mixed because some people will now draw everywhere. So things look dirty. You don't even know what to what. So now you can see that at this part of this chart we have something interesting. So if Euro USD crosses outside this line, let me shift it. I think there's still another point. If Euro USD gets to this point, and why was this thing here? Because there's a resistance here. Last frequency, the news makes a very strong resistance here. So Euro USD can cross outside of this place and cross here. The next place we'll be looking at Euro USD reversing at this place. But for now, we want to buy, we don't want to take buys anywhere because the market is bearish. So when the market is bearish, we only want to take buys when the market is at the bottom of your lows, in between the trend line. That's the time. Because if I had taken buy that, okay, I'm sure there's going to be buy because once there are connections here, 1, 2, 3 plus here, I took buy, I can put stop loss there. But if I start buying where it is now, I might be taken out. So you don't want to take this kind of trade. Just like if you look at the left, I didn't want to plot the trend line at the bottom, but we will plot it too, so we know where we can find buys. But since the market is downtrend, like it's bearish, the more opportunity you have, much pips to cover in terms of profit than struggling to buy. Because if I wait, let it come to this channel or this trend line and I sell, the market has just we could just consolidate and drop much. But if I want to buy, the highest it will do want to how many pips the market has reversed, see something like here, reverse. So even here now, the market, once it takes out these two lows in between, the market has changed direction. So now, who's this guy? Ifani, mute your mic now. Who is Joe Effect? Is this Joe Clement? Hello? This is Joe Effect.
Hey, Master, it's me.
It's Clement, right?
Hello, Master. No,
I'm
no, it's
asking.
not Clement.
It's not
Because,
Clement. I thought it's
no,
somewhere.
sir, not Clement.
No, somewhere. Okay, no problem. Okay, the one I have is Joe Clement. Okay, so now the market also has a channel at the left hand side. So if we want to be following Euro USD to buy it, you will always, how you trade these patterns is that you don't take trade when the market has moved. Don't enter because the market has one direction for now, though it's going forward and backward. But you can see that if the market leaves when it is here and you jump in between here, you might be taken out and it comes back all the way. So you want to enter where the market is sitting at the other side of the screen. So if I draw to the left hand side, Now, why I didn't bother to capture this side is because the market is on a bearish direction. This is market structure. So if you know the market structure, there's no need drawing lines here and there. So this is our, to the left hand side, this is where we always find our buy. So these are our goals. So we always buy at the low, at the support of the channel. We always take a bar here. Reach the bar. So until that trend line is totally broken. But I don't want to be drawing too many things for now. The market has one direction now. If it crosses here and breaks here, we'll now be trading the other way. We'll not be trading here and that way. But if you want to draw it this way, it will feel fine because it will help you know when the market has fallen and it's sitting there. You give a sniper entry, you buy, you put stop loss. So all these things help you in getting your sniper entry. Now, when you put it on the 4 hour, do well to change it to daily and see if the zones match on the daily. Because 4 hour is 4 hour. Daily is always better. So, but if we put this on the daily, let's see how it looks. That is sitting well with our zone on the daily. The daily is sitting well. So this we saw the market buying here. So let me drag it to the left. So the market bought here. So the market that place. The market spike. So for now we have been paying attention to here. But the candles at this place are showing too much of, we have lesser volumes on this trend line. So that is why we will not buy Euro USD now. Or if we want to buy it, we want to reach Euro USD buy at a lower level. Between here, I want to be risking buy when it comes lower. So that my stop loss can be closed. If you go and enter here where the market is, fundamentally, dollar is stronger than is stronger for now. So all these pairs, I was saying something last week. I said when your technicals does not align with fundamentals, don't trade that setup. Like now, dollar is strong. No matter how this thing is showing me rejection on the weekly when I change it on the weekly, but I know that fundamentally dollar is buying. So there's no how Euro USD will buy. It's only if there's a change in anything that is when Euro can move. So, but for now, I can only be playing safe by trying to sell where the market is sitting on these lower highs like here. So we watch here. Highest the market can do, they can manipulate it and come and test here. Then the market will return big time to the downside. So that is it. So you can see this, and then I think I'm going to create a new link that might take 10 minutes. So, but you need that, you use that time to reflect on what I, don't worry, I'm going to start a fresh one on another chart. So by the time I show you up to 3 to 4 charts, then it's very easy for you. Now, I don't take trades on the daily. I just have to set those alignments, leave it on the 4 hour. If the market, like tomorrow, if the market decides to sell and then come down to this place, what do I do? I now hit my shot. I leave it on 4 hours. So I would easily know when the market is beginning to work, give me a signal from my trend line. So let me fix it properly. So by tomorrow, if Euro USD crashes from there, we might risk another bar here and see again. So I told you that the reason why you enter is that when you enter at the right place, you enter at resistance or you enter at a support, your stop loss is very close and tight. But when you enter where the market has moved, like these days, you will see a green candle or red candle. Maybe you jump in, the thing will just begin to pull back unnecessarily. So sometimes I've always avoided those kind of trades. If the market has moved, I wait for it to come back and I enter again. So that is that. I'm going to send a new link to you guys. I hope this helps you in your at your advanced stage so you know what to trade.